Good afternoon and welcome to AvaTrade live Q&A webinar. My name is Danny. I'll be giving you the webinar today. Before we will begin, I would like to make sure that everybody can see the screen here and hear me properly. If you can comment in the question section, that would be amazing. Let's open up the question section. Okay, I would like more people to confirm that you can see the screen here. Let's just open up something. Okay. All right. If more people could comment in the question section, that would be good. Okay. All right, Dave, Celine, Andrew. Okay, more people. Just gonna let people join. And at this point, we're gonna begin. Okay. All right, let's just make sure the volume here works fine. Okay. I hope the volume is fine. I've increased it a bit. Now it should be fine. Okay, so like I said, my name is Danny. I'm part of the educational staff. I'll be giving you the webinar today, the AvaTrade live Q&A webinar. We're going to begin with an explanation what will happen in the webinar today. Okay, for some reason it doesn't seem like I'm receiving the sound. Okay, all right. So first we're going to begin with the common question that we have gathered in the past few weeks from other webinars. We're going to begin with the most common questions about a different subject in trading. Then we will move to dynamic questions, which are questions that I'm going to write down, questions that you guys are welcome to ask. And then we're going to go through links, information, and webinar privileges. And then at the end, if we'll have time, so analysis, if we wouldn't cover that through the webinar itself. And then lastly, an open discussion with a gift that everybody can enjoy, a privilege that you can enjoy after the webinar. Okay, so we're going to begin with a disclosure. Okay, any capital markets and trading information disclosed in this webinar is provided for informative purposes only, should not be constructed or applied as an investment advice, recommendation, or a suggestion. So I'm going to go for 5 to 10 seconds to make sure the webinar is recorded, as it's supposed to be, and then we will begin. Okay. Okay, so we are back. We are back. All right, Tomlin, I think that if somebody can confirm that the volume is okay, Tomlin seems to be complaining about the volume, but I'm not sure if it's on your side or maybe it's my side. Let me try. Perhaps I can increase the volume a little bit more. Everybody else can hear me properly, by the way. Can everybody else hear me? Maybe I muted myself. Just a second. Okay. All right. So at this point, we're gonna begin. Perhaps it's just the problem on your side, Tomlin. I'm sorry. Okay. So we're gonna begin with the common questions that we've gathered. The first one will be how to use Ava Protect. Secondly, how to calculate potential profits or loss. Okay, and then it will be how to make a withdrawal, and then how to do trading preparations, and then how can I follow another trader. Okay, so to begin with, we're gonna begin with Ava Protect. I cut with trading. Okay, so I'm gonna put down, just a second, I'm gonna put down some of your questions. Okay, maybe I'll do it later. I've been requested to not to make big breaks because it's confusing beginners. Look, I've written down the questions. I see some questions. I'm gonna attend those questions as soon as I get a chance. But right now, I'm gonna carry on with this segment, and then we're gonna carry on with your questions, which I have 5 questions to write down and demonstrate for you all. All right, so how to use AvaProtect. Let's pick up an asset like this asset as an example. All right, at this point, it's almost, the euro is almost equal to $1. And we're going to demonstrate how to use AvaProtect. Okay, so for the people who are familiar with AvaProtect, this shouldn't take too long. Okay, so the idea is that I can protect my positions for a certain time. How do you trading a stop loss? I will attend those questions very soon. Okay, AvaProtect. So how can I use AvaProtect? This is very, very simple, guys. Please pay attention. All I have to do is simply to click here on the box, and then I can choose the time. Now with the time, okay, which I can change, by the way, which I can change. Let's say I want to change it to 1 day, just as an example. Okay, and we're gonna raise this one by 10 pips, perhaps 100 pips. Yeah, each pip now is equal to $1. And then what we're gonna do is we're gonna look at the fee that we have to pay. When we're using the product AvaProtect, as it's written here, what it allows you to do is it allows you to protect your position for a certain time frame. Okay, protect your position for a certain time frame, and of course, whatever you lost during the coverage, okay, you will get your losses back as it's written here. Now there is a fee in every position that we will pay, and there is the potential profit, and there is the potential loss. Okay, and at this point we're gonna measure. We've hypothetically put a take profit and a stop loss just for the sake of the discussion. So in this case, the potential profit is going to be 108.5 and 92 point, all right, 92 flat. And the fee that we'll have is 41.77. Now in a scenario, okay, that it got into 999, which is approximately here. I see more questions. Believe me, guys, I will attend those questions briefly. All right, we're gonna have to settle at this price, and we have 99775. No, this doesn't make any sense. Are we with a buy? Yes, we are. We're gonna decrease. Okay, and then this will be at this price. Okay. Okay. Now we have two scenarios when we're using AvaProtect. As I said, we can make profits or loss, and there is a fee that we'll pay. Now, scenario A is, call it case A, is when we have made profit. Let's say it got into here, okay, to the green line. And then with the green line, okay, if it goes up by 100 pips, we're going to make $100. And if it goes down, let's say case A, we've made profit. Okay, we'll see profit profit 108 minus fee 4177, and case B it will be where we if it goes down, so we're going to lose 107. As an example, fee will be minus 41, and then we'll have plus loss returned. Okay, it will be written a bit differently. Then it will be plus 107. Now the plus is not a profit, yeah? Just to make sure with everybody. The plus here is not a profit. The plus here is where the losses is being returned to the account, okay? At the end of the position, okay? It's likely that it will not get to the take profit or the stop loss equally. Let's say it can get up to maybe this price or maybe that price, okay? If it doesn't get to the stop loss or take profit and there is no losses or profits to be made, and then I will only pay the fee at the end of the position. Okay, I'll be paying the fee at the end of the position, but in case it gets to this price or that price, those are the two possible scenarios that we have. Okay, this is how it's going to look, very similarly. There is no way to extend the position at the coverage on the position. That means that if I want 2 days after this day is done, I cannot do so. Okay, I'll have to reopen it. I have to actually open another position which is covered. Okay, I may not extend the time that I have on the coverage. All right, so this is how you can use AvaProtect. It's obvious that while I'm changing the quantity, let's say I want to have one lot, it will change the fee considerably. Okay, it became from 41 to 417. All right. What is the option for GBP by Jut Chen? This is also possible for other currencies. Okay, this is possible for currencies, silver and gold at this point. Okay, showed on the chart. How to calculate potential profit or loss. Okay, so this is just apparently that does it by itself, right? We have the potential profit or loss. How is this calculated, by the way? Because we have one lot of currencies. What is one lot? 100,000, right? Because it's 100,000 and this movement is 100 pips. What is pip, by the way? Pip is the fourth digit after the decimal. So this is 10 pips and this is 100 pips. And while I'm changing it down, this will have, okay, perhaps I'm changing it, I can change it up. And it will be a bit complicated, but you can see, let's turn into a cell, but you can see that my potential profit will increase while I'm changing the pip number, the pip price. So if, for instance, I have increased this, the pip here by, okay, I have one lot, I've increased it by 100. So it will become 1,000 higher, almost 1,000 higher. If it would be 0.1, meaning 10,000 euros, 10,000 euros when this is the pip, fourth digit after the decimal. If I increased it by 100 pip, we have a change by almost 100. Okay, we're not gonna get 100 flat because of the spread. Okay, but without the spread, 100 pips multiply 10,000 currencies is $100. So this is how you calculate. I'll give another example on a commodity in case this is a bit too complex. Okay, full take wheat is an example. And I would like to have perhaps platinum. Okay. For instance, I want to buy 1 ounce of platinum, 1 ounce, just a single ounce, and I'm expecting a movement of, let's say, $100 till here. So how much will I make? $100. 1 ounce multiply $100. So the equation that I'm using is to calculate profit or loss is, okay, so to measure profits or loss, the equation that I'm using is quantities multiply movements, okay, equals, okay, perhaps units, because this could be anything, right? Any kind of units, bushels, ounces, okay? So this is how I can have potential profits or loss. The amount of units, we said 1 ounce multiply 100 is 100. 10 ounces will be 1,000, okay? If I increased it by half, how much is 100 multiply 50? Okay, 500. Okay, that is not complex at all. It's not complicated. As you can see, right, this is, again, we have to consider the spread here, but almost 500. Okay, this is very, very straightforward. Okay, this could be applied. I've showed it on currencies and I've showed it on platinum, but it could be applied on a stock or an index as an example. Okay, but the equation stays the same. Units multiplying movements, or perhaps price difference. Okay, how do I make a withdrawal? This is the third question. All right. Now, how to make a withdrawal. This is, again, very simple. I'm going to show it to you just now. We're going to go down to the page where if you logged your through the website, avatrade.com, you'll be able to see this interface. It will look very much like this. Okay. Now, to make a withdrawal, all I have to do is to go to the corner, left corner up. I'm going to click here, make a withdrawal. Okay, at this point, you can see here the tab withdrawal. I even have a list with a history and everything. Obviously, I need to specify which account I want. And then I'm going to, at this point, we're going to go with wire. As you can see here, by the way, there is no deposit fee or withdrawals fee. Very convenient. I'm going to go with $1. This is, by the way, sometimes I get this question: what's the maximum amount I can withdraw? What's the minimum amount I can withdraw? So this is just $1, okay? Obviously, I'm gonna fill this, and then it wouldn't complain about me missing details. Okay, very straightforward. How to make a withdrawal with AvaTrade. So I'm gonna put here, log in to the website with your email and password, and then click on withdraw. Okay. How to do trading preparation. So this is a new question. Okay, we haven't had this question, I think, since the beginning of this webinar, and this is one of the most important things the trader never do, because it takes a bit more time. Now, who knows what trading preparation is? Trading preparation. What is trading preparation? Why do I need to prepare before I'm trading? Perhaps I can just trade and that's it. What's the problem with just yeah? Why do I need to make preparations for my trading? Supposedly it's a waste of precious time. But let's suppose that I want to make $100, okay, today. Let's suppose I want to make $100 today. To make a good judgment, to make a profit. Okay, this is by Andrew. Good point. Okay. Trading preparation, right? We're gonna pick an asset. We're gonna pick ourselves a nice asset. I think last time we've picked gold, but I feel like gold is gonna be interesting today. Josh, you're asking before the trade begin? Yes. The answer is trading preparation is what you do before you take a position. When you do the analysis, okay? So we've been asked what was the question here? How to do trading preparations. Okay. So right now I want to make $100 today. Okay, goal $100 time today. Okay, in a day. Let's say in a day. Let's not exaggerate. Okay, gold $100 today. Let's see if it's possible. We now have $10,000 to work with. Okay, we are now doing the preparations to make sure it's valid. Our request is valid, that we can do this. It's possible, regardless if it will happen or not. We want to know if we can do this or not, if it's possible. So let's hypothetically think that we said that we want to make it during one day. Those guys are daily candles. Okay, that means that while I'm pointing at the candles, it will signify the date here. This is the date, the 6th, the 5th, right, the 4th, etc. Okay, so each day, every candle here is a day, and I want to prepare myself whether this is possible or not. Perhaps I'm going to analyze and it's hypothetical. So we're going to look at the numbers here. 1712. We want to make $100. Let's see if we have just 1 unit, 1 ounce of gold. We said that to make 100, how much do we need gold to move? We are with a buy. Okay, let's pretend we think that it will fall down. Let's go with the sell. So how much do I need to make? Let me help you guys, since I've already put down the equation here. Okay, so 100 divided by 1. How much gold needs to move, guys, for me to make 100? Let me help you even more. Now price. Okay. How much is 100 divided by 1? 100, right? Okay. Okay, the question by Josh is, without those preparations, you wouldn't know where you're heading. Yes. Yes, without doing this, I could never know where gold is heading, and I could never know whether it's possible for me to make $100 today or not. Okay, I'm just gonna shoot a position without. Okay, so this preparations. Now, I want to make $100 during a day. This calculation that I'm using is 100 divided by 1. I've put 1 ounce just as an example. Let's see if it can move $100 by until tomorrow. Let's see, where is $100? Where is $100? All right. I'm sure you guys understand that my point here. I'm not gonna. Let's see if I can take it even more. Never mind. This is quite enough. This is pretty enough to make a point. So this is roughly $100 down. It's not exactly $100. It's more like a 90. But tell me, do you think that gold is possible to move $100 by tomorrow? I want to trade 1 ounce. Is that possible? Let me know what you guys think. Do you think that gold can flinch $100 in a day till tomorrow, to be frank? Matthias, anything can happen in the market. That shows me that you've been trading for a while. But this is not the answer that I'm looking for. But let me rephrase. Um, on average, can I expect gold to move $100 by tomorrow? Look at the chart here. How much did it move yesterday? Okay, from here till here, right? This is how much it moved. So roughly $27. This is also similar movement to the day before. So $100 might seem a bit far-fetched for me to expect. It's possible, but it's very far down. What about if I minimize this to just 10 ounces? So to make 100, how much is 100 divided by 10? Just 10. Can I expect it to move $10 in a day? Answer is yes. Yesterday it moved more. The day before it moved more. Here it moved approximately 50 or so, maybe 40. Anyway, it's possible. So thanks to this preparation, I've acquired enough information to know that it's possible with the movement. Now let's see if I have enough money to acquire this position. Okay. Okay, so the value for this position is 1711 multiply 10 ounces. How much is that? It's already written here, right? Value, right? Now, thanks to leverage, we can enjoy the margin impact. The actual margin for me to take this required to take this position is only $85. Now I need to know about two things. What is margin and what is leverage? So leverage is a multiplier that if I go to gold and I click here on the I can see that the leverage for me is 1 to 200. My multiplier in this case is 1 to 200. So if I'm looking at the price, the value here, and I divide, uh, the value, which is 17,000 by 200, how much is that? The number that we have here. So thanks to leverage that multiplies the margin that I have, the balance that I have hypothetically, that I can actually the leverage allows to take a bigger position with the same balance. Yeah. Okay. In this case, what we're looking at right now, okay, is that it's possible. Do we have $85 available? Much more than that. Much more than that. We have 10,000. This is why, thanks to the preparation, I know that I have enough money to take the position, and I can expect gold to truly move what I have, showed here. Okay, $10. It moved more yesterday. It moved more the day before, 2 days, and etc. I can take more examples, but there is no need. I think that the principle here, it's quite understood. Went to the website, preparations, showed on the screen. How can I follow another traders? Okay, so this becomes more and more common, this question. Okay, so to follow another trader, we have two kinds. Perhaps I should put it here. Software or no, I think that this question, how can I follow another traders, is only Okay, so to use AvaSocial or DupliTrade, okay, what are those things? Those things are AvaSocial is an application by us that we have developed. It's a social platform. It's a social media platform which you can choose somebody to follow. If you see somebody with good performance, you have a list and you choose from the list. There is I wish I could have showed you, but this computer doesn't allow me to show an application. Perhaps I can get it for you in the future. If this question will keep on coming. Okay, so AvaSocial, I have a list of traders. I can choose from the list of traders, and then I can follow somebody and then to see what he's doing, to actually build my own strategy. I don't have to do exactly what he is doing, but it could give me an indication of how it's of how things can look like. So what I'm going to do is I'm going to write down here AvaSocial, choose from a list of traders, okay, based on performance. DupliTrade is a bit different. This is a third-party company we work with. This is choose from a list of providers. What is the difference? The difference is that in here you link your account to somebody who is trading, which is automatic. And in here, you follow somebody. You can also copy somebody and really do what this trader is doing. You are linked to his account. Your account is linked to his account. And in here, okay, it's the same idea. You link your account to somebody else's account and you have different providers, different strategies. Okay, in here, you can follow somebody that has similar strategy. Okay, so AvaSocial and DupliTrade. Whoever has a senior account manager, he can ask for the link, and it's very nice and user friendly. Okay, all right. Now I'm gonna write down the question that you guys have asked. Okay. Okay, I caught with trading. Okay, so we have a question by Edgar Miranda. I'm gonna put your question here, just with few. Okay, we have another one by Sonia. How to? Okay, I'm gonna change to use. Okay, just all right. We have another question here by Flint Brown. You explain what is margin. Okay. Feel free to ask away anything that you want, guys. I still have another two places, but I'm gonna start answering questions, and then we're gonna carry on. Okay. Okay. All right. So we're gonna begin. Let's see, cut with trading. Uh, I'm gonna change. I have to rephrase this question. Okay. So sorry. Okay, I'm so sorry that I'm changing your questions, guys, but this has to be a bit more accessible for the audience. Okay. Hi, Dan. Can you please explain? Sure. Can you please not to change the leverage? Okay, the leverage cannot be changed, but I've already answered about what is leverage. I'm gonna put here, but maybe I will replace this question soon. Talking about leverage. Edgar, I'm not gonna paste this question. I'm just gonna give you a straight answer. The regulations allow certain leverage that cannot be exceeded with license. So what we allow is what is in the license. If you have another company who is giving higher leverage, it might not be licensed. So consider it's not. It's your choice at the end of the day. But like I said, it's everything has consequences. Okay. You think about Twitter, Charlie. This question is not. I'm gonna paste this question, but again, it's not. If you want my opinion, I can give you my opinion, but I cannot tell you an advice about Twitter. All right, so we have enough to begin with. Do we have any more? Okay, perfect. We've covered everything. All right, what has an impact on crude oil? Okay, what do you think, guys, that has an impact on crude oil? There are three things that we can determine. Okay, why assets are fluctuating: supply and demand, and what else? Media determining value. Media determining value or news. That means, for instance, right now production is. Who, by the way, who in the world is responsible on crude oil? Who knows? US, right? US is producing crude oil, and of course Saudi Arabia, which gives its crude oil, and it has an agreement usually with Russia and so on. So when the production is 10 million barrels a day, right? Right? And we have discovered, and now there is a new forecast. Let's say the forecast is there are two situations. Forecast could be, let's say, regardless if it will happen or not, regardless if it will really change or not. Okay, what do you think will happen at the moment that they will show the forecast? Regardless if it will happen or not, just to show that there is a possible increase. Okay, let's make it more significant. Just a second. What do you think? What do you think will happen if it just shows the forecast? It's not really going to rise to 11 million. Just show you the possibility that it will get to 11 million. What do you think? Now there will be more barrels in the market. There will be much more demand. Let me put it this way. Much more supply. I'm sorry. Much more supply. Okay, so It could go up. What do you mean by it could go up? John, if you can explain. That means that if the world is planning to consume more barrels, okay, the price can increase. How so? Because more people need oil. Yeah, and if more people need oil, that means that what? That price can increase. If people use less oil, like happened in the corona, and there is less supply, there is less demand for usage, that means that oil is less viable. It's less viable, and this is why its value can decrease. If you remember what happened in the corona, I don't know whoever was trading at this time. Okay, then you can see that the value here was very okay. All right, so it works the other way around. It works the other way around. For instance, okay, I'm not gonna paste this question, Sonia, due to the this is personal, but I'm just gonna state it to the audience because I think it might be important and useful for other clients. What if you lost your card that you made your deposit with? Can you use another card and how? So actually, this is actually I'm gonna replace. I don't know who wrote the question with the leverage. Okay, but I'm gonna replace. Um, I'm gonna replace this question because leverage I have explained about it, and I can explain it again in a minute. Right? I'm just gonna use here. What if you lost your card? What if you want to replace? Oh, never mind. Never mind. Let's keep it. Let's keep it the way it was, and I'm just gonna give you an answer here. Just gonna give you an answer here. You can ask your account manager to replace the card with a reason that the card is no longer usable. See if I can. Okay, I hope that everybody saw the answer. I'm not gonna paste it. Okay, so that works the other way around. What is the now? This is the forecast. So if the actual, so this is the demand, right? This is what we anticipate. We anticipate that the world will need less barrels. Okay, that means that we need to supply less barrels. If the actual is going to be as same as today, that means that the forecast was not valid as we thought. It's not 9, it's 10. It stays as it was before. That means that its value can go back to where it's been before the forecast. If it will be lower, we need less barrels, then value can go down, right? Okay. All right. All right. And of course, news. So for instance, if it's not a report, if we have a war, or if we have another variant, God forbid, or I don't know, any other reason, right? Sometimes even interest rate and some other intervals has an impact on oil. We're not going to discuss this now as it takes more time, but this is practically, there are many things. There are many things, okay, but mainly supply, demand, and news. How to use a stop loss. This is super simple, okay? So to use a stop loss, all I have to do is to click here, stop loss. What is stop loss, by the way, guys? Stop loss is where I am marking a place on the chart. Now let's say that this is gold. We are looking for crude oil. So I mark in a place on the chart, let's say $5 down. Okay, and I'm thinking that $5 down multiply 1,000 can get me $5,000, right? Now we are selling. So if it goes down $5,000, if it goes down $5, I'm gonna make $5,000. Okay. Now stop loss. If I'm selling, my stop loss will be higher. I'm gonna paint it in red line. We're gonna put it $5 up. Okay. We're gonna paint it in red. How come I'm potentially making a loss of $5,000? Because I have 1,000 barrels. I have 1,000 barrels, and it could go up. It could go up $5 up. But if I would be buying, where would be my stop loss? Down, right? Because if I'm buying, I want it to go higher, and if I'm selling, I want it to go lower. This is why the stop loss will be according to the direction of the position. Buying means I'm heading up, selling means I'm heading down. So my stop loss will be versus the direction that I'm planning to trade with. Okay? Okay. All right. Um, all right. All right. Can you explain about margin? Again, I have explained about margin and leverage. So at this point, can you explain who asked this? I will actually explain about both. I will explain about both, okay? Crude oil, our position, how much it cost? $87,000. How do we get to that value? We multiply the amounts of units. How many units? 1,000 barrels. 1,000 barrels multiply by the price 87. That leads us to 87,000, right? Thanks to leverage. Where is the leverage? The leverage here is 1 to 100. That means that I need to divide my value by 100. How much is 87,000 divided by 100? Let's see. Okay. What's written here? 870. Okay. How come this is 870 and not 87,000? Because of the leverage. Okay, that means that my 10,000 will behave as if I had much more, almost a million, but we still have the collateral, the margin impact. Okay, now what is margin? Margin is, okay, margin is the the leverage multiplied by the asset value. For instance, if I would want to, let's say, have just 100 barrels, okay, then this would be less. Margin is what I have to comply to keep my position opened. Okay, this is why we have something called margin call. So for as long as I have, let's bring back the, okay, as long as I have 870, I can keep my position opened. Once I don't have enough margin, what is if I don't have enough margin? So What happens if I don't have enough margin, guys? I need to comply to 870, right? What happens if my margin drops to 900? I have a valuable margin, 900. Is that okay? No. Why it's not okay? Okay. I have to comply to the margin impact with enough margin. Okay. And then my margin level is something I have to maintain to keep my position open. Once my margin level goes down, okay, I'm heading to a margin call. Margin call. Okay. Margin call means I am before I can't comply to the margin. Let's suppose I have 10 positions like this and my margin impact is 8,700. Okay. I have 10 positions of one lot and my margin is 8,700. Okay. That means that all of my balance, and not all of my balance, almost 90% of my balance is occupied to those positions. Okay. So to have another two positions like this almost occupy all of my balance. Okay, this is, it occupies approximately 10%. 8.7 to be accurate. Okay, the margin is the balance multiplied by leverage. 1 to 100, that means that I need 100 times less than the value of the asset itself. Okay, can you explain about, so showed on the screen and showed on the screen. Okay, all right. What do you think about Twitter? Let me leave it till the end. Whoever asked this thing. Remind me this in Edgar, remind me this in 5 minutes. In 5 minutes, okay? I want to give you the links here because the questions about those things is something I would like to answer right away. Otherwise, I won't have time to do that. So what I'm giving you guys in the chat is to make your life easier with getting to the links to open a real account and to the academy. And this is something I will give you in 5 minutes. Okay, this is unfortunately we don't have time for that now. This is also no. We're gonna speak about Twitter. Who is the lucky guy? Dave, right? Dave, I think you've asked what I think about Twitter, but you might not like what I'm gonna say. Okay, I don't know if you're a fan or okay. I don't know if you guys know, but Twitter right now is heading very much up than what it's been. Okay, can somebody explain to me? Can somebody explain to me what is going on here? What is this? What is this thing here? This candle? Look at the size of the candles before, right? All of this area here. Let's say here. Yeah, and let's compare it with this guy. I don't even know if I can scale. And this is a bit more challenging than I. Okay. What? Can somebody explain to me this candle? What is this? 42 to 52. This is insane, right? Can somebody explain me how Twitter was able to, let's ignore this guy. Oh, it's still, okay. So can somebody explain it to me? 42 to 52 in a single day. Look, it hasn't passed 44 for, look how long, 4 weeks. Yeah, it gotten back to where it's been a lot of time ago. How can something like that happen in percentage? That's like 25%, I believe, right? 10% will be for maybe 20 something percent. How is this possible, guys? Look at this. Demand and supply. Elon Musk. Who knows this name? Who knows who is Elon Musk? Now, Elon Musk, as far as I'm concerned, has asked for a particular report from finance, and he decided that he's gonna buy Twitter with much lower price than what he'd offered in his first proposition. Now, after he got all of the reports, he decided he's gonna buy Twitter with the with the original price, right? That means that he himself has increased the value of Twitter without doing practically anything, right? Just stating that he's going back to the original price, which means that once he decided to admit its value, the buyers, well, perhaps I should say the investors can also have legitimate reason to buy it for more. Okay, this will not work 100 times, 100 times as a formula, but this is how it happened here. Okay, sometimes supply and demand has nothing to do with increase or decrease when the markets is fluctuating according to fundamentals. Okay, so we have covered most of and what I think about Twitter. I think that if it will keep increasing and he will do whatever he's done with Tesla, etc., so it can increase even more. But this is just what I think, right? I might be wrong. Okay, so at this point, I think that we've covered most of what we wanted to cover. There was a question here. Can you give us guides where to check future events? Yes, I'm just going to show it to you, Edgar Miranda, and then I'm going to disclose the webinar with the privileges that I promised you. Look, if you go to Trading Central, you go to Trading Central, and then you go to Economic Calendar. You can find here, and you can categorize by date and by specifications which assets, perhaps which group of assets you can find here, which countries, right? You have US, you have Turkish, you have Germany, you have all of a lot of interesting here in Trading Central. Okay, in this regards, this is the economic calendar. You have many different things, many different economic calendars around the internet, and you can just find yourself something to absorb information from. You can see here the forecast and everything. All right, I'm just gonna, before I fly, I'm just gonna give you guys what I've promised. This is a one-on-one premium market review with a senior account manager. Guys, this is what you need to use to give the account manager or the live chat to get yourself a live one-on-one premium market review. Okay, I'm just gonna paste it in the chat. Yeah. Okay. All right. Thank you all for joining us today. It's been a pleasure giving you this webinar today, the live Q&A webinar today. You're more than welcome to check our YouTube channel for more. And that's it. I hope everybody enjoyed and learned at least one small thing out of me. And the best for new traders, just go ahead, make a deposit, and start your journey with us. Anyway, best of luck to everyone. I hope you'll make a lot of profits, and I'll see you next week. Have a good day.